Welcome to Mark Arnold's Finance. Today I want to put up a warning about companies providing estimates, future financial estimates for their companies, why people weigh that so heavily, and maybe why you shouldn't. So before we get started, please subscribe to my channel so you don't miss an episode. I'm very transparent, and as I've promised, this is the second or third video I've done this, but I am sharing with you guys my portfolio performance with every single video. So let's see what that looks like right now. Today, I dipped a little bit lower. I'm at 6.89% in the green, so that's about $2,300. You will see here the companies in green are doing great. The companies in red are not doing so great, especially Meta, Tattooed Chef, and Warner Bros. Discovery. I want to point out one company, and that is Amazon. Amazon is up 9.41% for me. Last time I showed a video, it was up 7%, which it's grown pretty quickly recently. Why this is today, when I made this video, Amazon, this was its first day with its 20-for-1 stock split. So if you owned one share of Amazon like I did, you now own 20 shares, which fundamentally makes no change. It adjusts its price. So, I bought in at like $2,200, so now it's $114 per share. But what this did for Amazon, if we look at the one-day chart, it's up nearly 2%. And throughout the day, it was up a lot more than that, but it ended about 2%. But what's really interesting is I think kind of going up to this Amazon splitting and everything, over the last month, Amazon's up almost 15%, which is a far cry. If we go out a year, it is down almost 22%. So it's very interesting. My opinion is when companies do stock splits like this, it just makes the company more available and tangible for a lot more investors, because one share of Amazon being over $2,000 is different than one share of Amazon being a little over $100. So more people are able to buy in. Yes, there's fractional shares, but not all brokers or platforms do fractional shares. So yes, it makes it more available. So I think that's why we're seeing Amazon go up, which, hey, I'm happy with it. It's in my portfolio here, so it's been doing good for me. But there's a quick look at my portfolio. But now let's get into my warning about companies' estimates. Like I said, when companies report their earnings, they usually follow that with an estimate on what the next quarter will be up to the next year. Not only that, but companies go to different conferences throughout the year where they also put forth estimates regarding their company, their revenue, so on and so forth. But I think the times that we're in right now, it's not a good thing to weigh those estimates heavily. We've seen many examples of estimates gone wrong. If we look at Snapchat, and what happened with them is the CEO came out a month after earnings and said, we have to revise what we put out there because what we said last time, it's going to be much worse. And so what Snap did is they reduced their guidance and said they will likely miss the second quarter revenue guidance it gave out the prior month, like I just explained, due to supply chain issues, the geopolitical conflict going on. So it really does provide us with kind of this insight where these companies are changing their estimates. And what that did to Snap's stock is it took it down about 43% in one day. That's off to the right there, that little blip. And the last 6 months, this stock is down about 70%. So with that one day 43% drop, based on it revising its estimates, just shows you what that can do to a company. Let's look at another company. Let's talk about Netflix. So Netflix was predicting in its earnings a growth of its subscribers, but it came in at a 200,000 loss. But more than that, it says that it is going to have projected 2 million loss of subscribers by the next time they report their earnings. And so what this is doing is it caused Netflix to drop in one day about 35%. So these estimates, when they change, they can create a massive amount of volatility in the stock. And if you just go by what these companies say and not factor in anything else, I think that's where things can get bad. So I don't really know Snapchat and the stock. I don't follow it, but Netflix I did. And I always thought about this. The pandemic happened. A lot of people subscribed to more streaming content platforms such as Netflix, and I thought to myself, this can't possibly be something where it continues after they had this immense growth because of the pandemic. But yet people were going off of their estimates. And what happened? Those estimates drastically changed. So I'm not saying I was predicting the reduction in subscribers, but I just didn't think that it could healthily continue that, at least for the next couple years, because it had to kind of even out, it can just keep growing basically. So I think other companies like Apple and Amazon, they also provided projections about lower guidance. So if we look at Apple, for example, they're saying we could take an $8 billion hit from the supply constraints next quarter. And Amazon, they had pretty bad earnings, but the biggest thing is they told that the revenue forecast was going to trail the analysts' estimates. So again, more companies, big companies coming out and revising their estimates much lower, and the stock suffers after that. Every single one of these stocks suffered after that. Even after Apple's near perfect earnings, that stock went down. So our risks as investors is that this pandemic, this volatility, the geopolitical conflicts, the inflation, so on and so forth, has created a more difficult time for companies to provide estimates. And these estimates can be far off from simple, their judgment, having bad judgment calls, to even fraud, right? So it's just very difficult. And a lot of companies are even kind of saying, we're not going to really provide estimates at this point. It's a little too hard to do so. So my warning is to be wary of corporate estimates, as in these times, it's very hard to be accurate like they were in the past. And many companies, as I mentioned, are choosing not to do estimates. And as investors, when a company gets it wrong, like we saw with the stocks that I mentioned, it can be devastating for the stock, such as Netflix and Snap. Worse yet, if the estimates are deemed fraudulent, right? A company in these times can decide to say, hey, we're going to put up better, expectations than what we know, just to kind of help their stock price. That's going to be devastating for that stock. And I believe this is more of a possibility because of the times we're in, where companies could, put estimates up that aren't, really reflective of what they're seeing internally. So be also cautious with things like that happening. So we have an example of American Airlines in 2020. When the pandemic hit, it had to ground hundreds of planes, and it put them in long-term storage in the Arizona desert. And American Airlines estimated that all planes would be back in the air by the summer of 2021. Well, they weren't. The pandemic was still holding on tight, creating a lot of headache for the airline industry. But if people bought into the forecast that they said, they would be in for a big disappointment when they came out and said, we can't meet that. Our planes will not be back up by summer of 2021 at the estimates that we put forth. So again, my warning to you is, in these unpredictable times, is to be very wary of these estimates, especially really positive ones. I think, that can be companies just trying to make themselves look good. So you have to take a step back. Does it make sense? Like Netflix, if they were putting these positive estimates going forward, if you took a step back like I did and be like, hey, they just had this huge growth, can they sustain that? Most likely, I don't think they could. And look what's happening with them. Amazon, another one, if you took a step back, like with the inflation, consumer spending is obviously going to slow down. So if you see very positive estimates, be wary of them, question them, think outside of the box, and think, do those make sense, or is there some risk there? What risks are there to those estimates? Where could they get it wrong, and how could the stock suffer if they do? So I think you should use estimates as a guide that companies provide, but not a certainty. I think too many people use them as certainties. The stock market definitely reacts to those estimates. They definitely do. So that's where you got to be careful, because like we saw, once they revise them, look what the stocks did once those companies put out those revised, lowered estimates. So I think too many weigh too much on the estimates when they need to take a step back and look at more of the fundamentals. Look at more of the environment around this company and how it's going to probably be affected by it. Not only that, but more of a warning, be cautious on people, just normal people on social media and different groups that you may be a part of, putting estimates forth. I saw this happen with Alibaba. Man, this stock was being talked about nonstop last year through the beginning of this year, where everybody, I'm meaning everybody that I heard, said this stock has hit a bottom and it can't possibly go lower. You invest in it now, you're going to become rich. Well, let's look at their stock price. Let's look at their stock chart, shall I say. If we look at BABA, I highlighted the time where I started hearing a lot of people on social media quote that they hit a bottom. So if you invested during this time, as you can see outside of that, it still continued to drop. And I think there's still a lot of risk with BABA, but all I'm saying is not only be cautious of corporate estimates, but of estimates that you hear from people on YouTube. It's something that it's always good to get an opinion, right? To maybe put some different thoughts in your head, but always go off of your own research, your own common sense on a company before you make any decisions. Don't just go off of somebody, because a lot of people went off of those people saying buy BABA, and then it went down massively, and those people were pissed off basically. But I kind of don't feel bad, because I feel like you should have maybe put more of a focus on the risks with China, and I don't think many people did. I did. I never bought into it. I just thought it was too risky for me. I hope it turns around for those of you who have BABA. Don't think I'm putting you guys down. I'm just saying it's not probably you guys. It's more so others that just look at somebody saying something and they go do it. Do your own research. That's all I'm saying. So why it's important to fully review your companies is because of the outcomes that could happen if they get their estimates wrong. Weigh the risks. Think outside the box like I mentioned, and the times that we are in. So right now, inflation is bad. It's remaining at all-time highs. There's geopolitical conflicts that are putting pressures on a lot of things. The Fed is raising rates. They're going to be reducing their balance sheet massively. We have shortages starting. We saw it with baby formula. I heard popcorn is going to be the next one. Who knows where else there's going to be fallout. So if a company is still holding strong earnings, question it. Also, make sure that when you see those outside factors, what companies are going to be affected by them the most, and put that into your research, into your thesis before buying a company. It really comes down to common sense. It really does. And it's easy to get caught up in things that you see. I've been guilty of it myself. But you need to factor in your own bearish outlook regarding estimates before you buy a company. I want to repeat that again. Factor in your own bearish outlook regarding estimates before you buy a stock. Do that, and I think you'll make better decisions. So again, estimates really drive stock prices. We saw all the stocks I mentioned, Amazon, for example. So be careful around this. Factor in the risks associated with it, and what happens if they get it wrong? What will happen to your stock? Are you okay with that risk? And do you still think the long-term growth prospects of that company are going to outweigh whatever might happen in the short term if they get those estimates wrong? So it is a tough time that we're in. We have volatility in so many areas. So I don't see how, a lot of companies are not going to be affected in the next coming 6 months to a year as they report their earnings. So for companies providing estimates, again, use that caution. Think twice about it. Use your best judgment, and just don't go off of what you hear. Like I said, it's kind of saved me in a few areas with BABA. I thought outside the box. I used my own common sense, and when a lot of people were following, the bandwagon, I went the opposite direction. Peloton was another one. I used my common sense, and I thought it's a pandemic stock, and I did a video on this. Many people were pouring into it. I steered clear. So all I'm saying is we can't always be perfect, but what we can do is put the best tools that we have in place to make our best decisions, and that's our minds, that's our common sense, that's our research, that's taking the time to look at these companies. So this is my warning about, right now, companies' estimates could be wrong because it's really hard for these companies to predict things right now. Before, I think you could be more reliable on their estimates, but now I don't think that's the case. So that's all I'm putting out there. So let me know what you think about this. What do you think will happen in the coming months? Do you think there will be more revised, lowered expectations and estimates with companies, even on top of what we've seen? Do you think things will get much worse? I just put a video, I'm going to put it in my description, put the link of my prediction of what's going to happen the rest of this year. And I think it kind of backs with what I'm saying today. So give me your thoughts. Let me know if you got into any stocks in that way, just looking at their estimates, and wish you would have, took a step back and thought about it. Mine was Facebook. I'm definitely in the red there, as you saw. And if I would have took a step back, I think I would have waited a little longer on that stock. So I'm having to average down now, which is okay because I think long term I'll be fine. But with that said, that's what I got for you guys today. Thank you so much for watching. Have a great day, and we'll see you next time on Mark Arnold's Finance.